Alrighty, y'all. I'm gonna do a trade recap for this morning, August 24th. I just finished trading this morning. I'm also gonna do a little analysis too, just to let you know what my bias was and how I got there. So I trade Nasdaq. I'm on the micros. I'm gonna take off my drawings so you can see it clearly, and then I'll add on what I drew on. So to me, we're bearish. Okay. I know that if you're more of a swing high, swing low, or stacks high, stacks low kind of person, you'll see this is making a higher high here, which is true. But I see this swing low here and I see prices going down. This is today's candle. We're on the daily. We're bearish. We've taken out this swing low. We have this really nice massive candle here last week, Tuesday. So we're bearish for this, for me. Okay. And then I'm looking at the swing high, and because I'm bearish, I'm looking for areas where price wants to gravitate to. I see this gap right here, which basically price is coming up to. Price is also going to gravitate towards here. It's going to gravitate towards halfway of this wick. Everyone trades a little differently. I like to trade ICT techniques and strategies, so my stuff may be weird, but it makes sense to me and it works. So I use wicks to measure out areas for liquidity. So this is a really long wick. Half of this wick would be where I expect price to come to at some point. I see this candle here with this gap beneath it, gap above. This is called a suspension block. I also see this candle with this gap here and this gap here. That's another suspension block. These are 1, 2, 3, 4, 5 reasons why I see price being drawn closer to this area. Another look for is this is a fair value gap, essentially, or a sell side inefficiency. I guess it could be, I guess this is a SIBI. I also see a little bit of a gap here, but since I'm bearish, I'm expecting price to come here rather than come up here. And then ultimately, you've got this low down here that price can gravitate towards, and then you've got draws on liquidity here. But these are the daily, so I'm not expecting price to come all the way down here. I'm just looking for little nuggets to scoop up. So I go down to the minute and 1 minute, and I go down to regular trading hours. Why do I look at regular trading hours? Because I look to see where there are inefficiencies at price on the regular trading time between that 9:30 Eastern to about that 4:14 p.m. Eastern, where price has not filled yet. Right? Because if you trade futures, you know that price moves after 5 p.m. and well into the night. You've got Asian session, Australian session, London session, and then back into New York. But New York is where the biggest volume moves, right? So during that electronic session, when price is only moving for London and Asia, nothing's happening in New York. So during regular time, I like to switch back and see what's happening for New York, or where there are draws that price could potentially come to. And so I noticed that on Friday, because today is Monday, Friday price closed right over here, 414. And then at 9:30 this morning, price opened here. And I kind of acknowledged this gap. And I'll put my drawings on to show I acknowledge this gap. And I expect, hey, price might want to come up here, fill this gap before it goes down lower, which again, bearish is my sentiment for this trade. And then I look for areas behind where I'm like, where are areas where price has not met its demand, meaning regular trading hours wise, price has not come back to fill, and it's still vacant. And here's a spot right here. This is a bearish fill that price has not come back to fill. So when I scroll to 9 a.m., I go, that's something for me to mark. So I'm going to put on my drawings now. It's a little scary, but let me take it back to the daily to show you what my drawings mean. All right, so this gray box here is a fair value gap. So I'm marking this spot as a very high daily draw on liquidity if we were to go bullish, or if at any point show some bullish sentiment, at least towards halfway of this gap before it returns back down. I also took a Fibonacci retracement, which I use a lot, to measure and see where price could be drawn to. And as we see, I use a Fibonacci for this wick here, because if you see that there's a wick right there. So I drew from the top of that to the middle, to the end of it, and this blue line is the halfway mark. So there's no body left above here. That gives me another reason for why price is going to be bearish. If I took the same Fibonacci, which I can right here, Fibonacci for this really long wick from the top of it to the bottom of said wick, and see the 50% mark, I'd see that this candle closed underneath it. This gives me reason to believe price wants to be bearish as well. And then where else did I? Then here, and Mark talked about the inefficiency between this candle with the gap above it and this gap here. I drew this box here and I said this is a draw on liquidity. And what I also like to do is I can take a Fibonacci retracement tool here. It gets a little confusing when all the drawings are there, but I can make this a little bit darker, change my half. I always put a different color for the halfway so I know where I'm aiming for. And so I expect price to fill up this gap and come at least halfway through this entire suspension block, which would be this blue line here, which is the 50% mark. There's also obviously an inefficiency down here, but again, I don't expect price to come all the way down here in the day. So it's all about kind of measuring things and being kind of particular about it. I'm gonna erase this because I don't need it right now. So let's go down to the 1 minute. Let me show you how I took this trade. And we're in regular time. Let me switch back to electronic time. Cool. So price opened up here. This is the price opened up right here, 9:30, right? Price opens up here because it's a bearish candle. It closes down here. What I notice is that it's respecting this level right here. Because if you see there's a 9:29 candle just before it, 9:30 candle, and you see that there are no bodies left above. This purple line represents the gap that I have drawn for where I expected price to come into this morning. Remember I said that there is a gap between yesterday's Friday 4:14 p.m. and 9:30. I drew this purple Fibonacci with the orange line in between, saying that if price were to come up to fill up this gap, which price tends to do that, it's going to have to come up at least 50%, maybe even up to 75, 62%. This is what ICT teaches. It should at least come up 50 or at least 70% is what he teaches. For safety reasons, I put my 50% because I can expect at least half of this gap to be filled. I don't have to expect for the whole gap, but at least half. So this purple line is for this gap. Has this happened yet? No. You can see price is still printing. It might come up into this gap at some point and fill it. But for now, it did not. So let me remove it so I don't cause confusion. So, and I do label it as an N wall because this is a new week opening gap for me. And I do mark that that's a very important gap because price is always drawn to it. And just because gap hasn't been filled yet does not mean it won't happen, because it will. Okay, so let's go back down to electronic trading hours. Perfect. So in this sense, price opens up with this very large dark candle going downward, which means we're and the whole point is that there's no bodies left up here. It kind of opens up at this line, goes down. Previous candles too, if you're paying attention to the 928, 929, and the 930, they kind of respect this space, right? You don't see any bodies of the candles being up here. They're kind of right here. And if I zoom in even more, right, it's just slightly above new week opening gap. And I have August 4th regular trading hours because I like to mark previous ones at this black line. This gray line up here is the new week opening gap. This is the 4:14 Friday time that I marked up here. And you can see candles are up here, but not by much. You've got a wick here. I could have measured that. But then again, there was such a huge move. This 930 candle was so large. So I kind of used that and decided this is going to be an inefficiency, right? Because it's such a large candle. There's a gap here between the 929 candle and the 931 candle. So I'm draw my blue box there. And this is an inefficiency. I kind of expect price to come in and recognize it at least halfway through before it goes back down again in the bearish direction that I'm expecting. I'm going to put my execution marks because I think that helps. Yeah, I don't ever pay attention to this. Okay, cool. So I entered in here on this candle. Why did I enter it on this candle? I saw this other inefficiency here, and I entered it on this candle just to see that it filled this. I actually entered in, if you see it says it's 2 arrows, but I believe I entered in, yeah, I entered in 1 and then 1 again, yeah. So I entered in twice. I entered with 1 to see how price reacted with this candle. Again, keeping in mind that this is an inefficiency, keeping in mind that I'm bearish, keeping in mind that I have this big move. Ideally, I could have waited for price to come into this gap and move down, but I also recognize that this is such a huge inefficiency. This is a nice inefficiency as well. I also recognize that we have that gap that I mentioned all the way back here somewhere that hasn't been filled, that price may want to get to in the first 30 minutes before it goes into the direction it wants to get into. So I entered into this price and I just kind of watched. So I see this large candle with this wick here, and I see if you measure it, just eyeballing it, the candle closes underneath that wick, so that gives me reason to keep going downward. And then I have an inefficiency here between this candle, there is a gap. And I wasn't paying attention because I was washing dishes. Had I been paying attention, I would have entered into a spot here, either with this candle or this one, because I would have said, oh, let me add to my position of 2 contracts, because I believe that price is going to keep respecting this inefficiency. Another reason why I would have entered into either this candle, or this one, probably this one, but probably one of these two, is because when I look back, I measured this wick, right? And I said this candle is closed underneath it. That's go for me. This candle here, if I eyeball it, that's go for me. That's why I would have entered into one of these, added more positions. This wick right here, if I've drawn the line, I recognize this wick. And so I saw price was respecting this wick and staying at the bottom. And so it was giving premium sensitivity. And so it's wanting to go down. Again, everything is supporting my bias of being bearish. Prices are staying at the lower half of positions, which lets me feel like, okay, we're going in the right direction for me. We make this wick, we make this candle, we make this nice big move down, and then I see this candle and I measure halfway mark. This candle closed underneath it, we're good to go. I'm still in this trade. I continue down. Again, I'm washing dishes, so I don't get to add any positions. I enter, this candle goes down beautifully. I measure halfway mark of this full candle, and I see that this candle closes underneath this. This gives me more sentiment to keep going bearish. Then we get to this candle, we're bearish, beautiful, and we get this candle's bearish. But then we get to this candle, and I'm looking at this wick, and I see I left this measurement here so that you can see halfway where that orange line is actually half of this candlestick. And you see this candle closes above it. That's how I got out of my trade. Now, could I have stayed in? Sure, because I see that price is respecting this key level right here, 62%, right? But there's no reason for me to do that because I've hit a key level down here, which was 0.875 as well. So I use this key levels, this Fibonacci. This is a measurement of a gap that was recognized. I'm going to go down to regular trading hours because it might be faster to show. Yeah. Back in August 4th, there's a gap between the 6:14 time down here and 9:30 opening. When I draw this Fibonacci here, I expect price at some point to come back, right? And let's see. You see price is up here, up here, up here. It kind of comes, but up. It doesn't go all the way. It keeps going up. It goes up even higher. It keeps going, keeps going, keeps going, keeps going. Gaps up even higher. You're like, okay, is it ever going to come back for this? Price never forgets. There's a phrase, and I don't know if this is a real phrase or not. Okay, price comes down, but there's a phrase that says, desert still, well, I get it from a song, but desert still has memory of water. Like water never forgets where it's been, so it always returns back to its location. So give it time, and as you see, we give it time. Price is meandering, meandering, meandering. Remember, this entire measurement is the gap from August 4th. It's getting close. It's being drawn there. It's being drawn, and then eventually it plops through. And if we pay attention, it comes just to 825. And you see how the bodies don't touch this line? It doesn't even cross over. That's important. That shows that it's a key level. First, it shows that this was drawn well. Secondly, it shows that price is very sensitive to this level. If price comes and barely touches it or comes down here, that's a big deal. To me personally, that lets me know that this price is important. So I'm glad I got out, basically, is my statement. So now price is still going. Let me switch back to electronic trading hours. So I traded with just 2 contracts, nothing major. But if I think about how much move I made, I entered in here, somewhere here, and I got out, actually got out somewhere halfway in between. That is a 155 move, or whatever this is, 622 move. This is more of 155 move. Let's see. I moved from 142 to 2 to, yeah, that's a huge move. Hold on. Wait a second. That's 600 handles. Is that right? Give me a second. Oh yeah, that's 29,987. And I entered. Okay, that's a huge move. That's a big deal. If I put in more positions, that could have been like 10K, right? So it's not about staying in a trade forever. It's about entering in the right time and making what you can make and get out. Do you have FOMO now? Because, oh man, look at this big candle. I should have gotten in and it's closed underneath this yellow. You can, but for me, I got what I got. I'm cool. I'm not complaining. You know, why should I? I followed my schedule. I followed my plan. And time is a huge factor. So now it's 10 o'clock. 10 o'clock to 10:30 or 10:50 is going to be consolidation time. We notice how price is just kind of right in between these price points. There's a reason for it. Could it still go down and drop? For sure. But time is a huge confluence that I look at. And so right now, I got into this trade at, let's see, this is 9:35. I got out of this trade at 9:46, just before the macros. And now I see that price is kind of stagnant. Wouldn't you hate to enter into this price and then just like bounce in between? That would suck. Also, I look at 7 o'clock. This is 7 o'clock to 9 o'clock time. And I noticed that price really just didn't have anything going on here. Between this line and this line, which is the blue, price kind of stayed in between here, which is fine, but it consolidated right in here. So if it's going to consolidate, price tends to consolidate before it distributes and does what it needs to do. It may do like a little fake out manipulation, go up thinking you're going to, go up, but then it ends up going down. So yeah, that's how I took this trade. I hope this is kind of clear. I would love to do more webinars like with people so that people can ask questions about it. But I figured I would record, especially for beginners who are trying to figure out a strategy or trying to just understand the market and understand price action. We're Price Action Lab. So this is all that we do with our strategies, is discuss how candles move and really understanding and interpreting it. So I hope this is clear, and I hope putting the execution marks lets somebody know where I entered and exit, because I hope that helps you. All right.